All right, good morning. Hope all of you guys are doing well. Hope you have a great weekend. So, as always, we start our week with a top-down vision, with a hard time frame analysis. Everything that we talked about last week, as you guys can see, is playing out to absolute perfection. Literally, what we've been looking for right after price took out this sell-side liquidity here, rejected the monthly bullish pivot. He started calling this exact expansion right here, running this buy-side liquidity. So, yeah, I will attach some screenshots from our old analysis, old breakdowns. In a way, we literally predicted this entire move right here from this low to this high to this buy side liquidity. It was more than 1000 pip move that we predicted right here. So yeah, for those swing trading and doing all of that, I think this wasn't something unexpected, as again, we've been talking about this exact move for a long time now. So all right, overall, if we sum everything up right here and focus on the main things that we need to look at, overall, remember that we are moving towards the premium. From the bigger perspective, what we are seeing right now is still bearish delivery, bearish direction. At all, as we talked before, if we would have seen price drop right here and break this low, this would be way too extreme prices here for euro. So after this long B down right here, it's recovering. Notice that it's pushing above this fair value gap, this quarterly fair value gap that we saw price reject a few times before. And now it's delivering to one specific level that we talked about also. It is quarterly BPR that's overlapping some monthly imbalance points as well. And what I'm talking about right here is, notice this bullish imbalance being filled with bearish imbalance. So what we have here is a BPR zone, nice and clear, little nice and clear structure. And the low of it right here is another magnet area sort of thing that we talked about. Once price takes out this buy side liquidity, we wanted to see price reach towards this BPR and some monthly overlapping P. The first level that we had on site was this inverse fair value gap right here. The low of it, price already reached it. So now the second power that we are focusing on is this quarterly BPR. And I'm again talking about the low of it, which is at 1.1495. So we can add the number right here. So now if we drop to the monthly time frame, again, not much I have to add right here. Quickly running through the main foundation. Once price rejected the consequent encroachment of this bullish monthly fair value gap, once we saw this happen, once we saw price reject it right here, this is where we said that, okay, if now daily time frame and 4-hour time frame starts showing bullish signs, starts switching to the upside, what we will have here potentially is price running tons of sell side liquidity, running into bullish pivot right here. And based on where we are on the map regarding the higher time frames, regarding the overall logic, fundamentals and everything, this is where we said that, okay, we want to see price run to at least this buy side liquidity, this being the main quarterly buy side liquidity level, the main drawn liquidity, the magnet area sort of thing, and all the overlapping quarterly and monthly imbalance right above being another magnet right above right here. So overall, specifically the level that we talked about once price takes out the main drawn liquidity right here was the 1.15, which is the institutional level, which notice is aligning almost identically to this BPR low, the quarterly BPR low. So if we add it right here, notice that it's literally sitting right on the low of this quarterly BPR. So that's perfect. So from this point, as our higher time frame draw on liquidity is reached, price continues pushing to the upside right here. What again we wanted to see with this candle is either after this candle closes and opens right here, run quarter two opens, we wanted to see price push lower, then start pushing to the upside, leaving a wick right here, and then start forming a bullish candle. So this is exactly what we got as well. They had in mind that this could take place if, let's say, April starts consolidating, we could see May rush lower into this bullish BPR right here and only then push to the upside. But obviously, as you guys can see, we didn't have that much structure. Right after the open, we saw this tiny manipulation right here, this tiny wick, and price exploded to the upside towards on main drawn liquidity right here. So this is what we are seeing right now. One thing I want you guys to remember is that we have Eastern holidays this upcoming weekend. We have lots of higher time frame targets ticked off. So we like it or not, rushing to the upside is possible only if the lower time frames will will align, giving those market maker buy model fractals running into clear high probability Peter race. This is where we want to see these lows, these strong structures form during high volume times of the day and so on. So remember that today on Monday, as always, you're not trading long on kill zone. We will focus on the near kill zone. One major factor is that it's an empty news calendar Monday. So this is often then we see very low volume in the markets. This is where we often see no clear and clean setup. So today is one of those days when we will most likely be sitting on the sidelines. And the main focus this week will go to Tuesday, Wednesday, and Thursday. Because on Friday, we will see volume die down pretty fast. Obviously, some setups could take place, but we will see majority of traders step on the sidelines. And this is where we will have to stop for the week. So overall, we will have a 4th-day trading week, and we will look to wrap it up during Thursday's London close kill zone. So this is what we see on the monthly time frame. Let's now go to the weekly time frame. All right, so what we saw right here is also not something that we didn't expect or anything. Notice this consolidation. We have a separation line right here. So what price was building, running towards this massive sell side liquidity pool was sell side of the curve. And what we wanted to see was for price to bottom out and start building buy side of the curve. So we talked about this a million times already. I'm not going to repeat myself again, but overall, I think you guys can see how nicely the original consolidation was ticked off right here and how fast price started pushing once price reached into the equilibrium and into the second half from the reversal to the name original consolidation. So if we would measure from this low right here to this high, which is original consolidation, notice that here in the first half, we had some messy price action right here where we weren't fully sure what is going to take place, how more choppy price action you will see until price starts accelerating. And once it reached the equilibrium and the second half right here, from the strong reversal to the original consolidation, again, once it reached into the second half, notice how it started exploding to the upside. So we had this busy candle here on the weekly time frame in the buy side of the curve of this weekly/daily market maker buy model. So overall, we were looking for price to expand right away, but we kept in mind that a deeper, bigger wick to the downside on quarterly or April monthly candle could form. So we thought that this one more drop running sell side liquidity, likely even reaching into the consequent encroachment on only then expanding, was also very likely to happen. But as you can see, price just exploded to the upside right away right here from this weekly dizzy candle. Notice now how it reacted to the bearish fair value gap right here, something that we had on our charts as well. It left this wick. If you would ignore this candle, if you would ignore last week, notice that price ran this buy side liquidity. We had a tiny market maker buy model inside of this development right here on the lower time frames. Obviously, it's not visible from the weekly. From the weekly time frame, it's looking like just a simple pullback right here, an expansion. So price expanded to the upside, reached into this bearish weekly time frame fair value gap, gave a reaction to the downside right here with this candle, and opening on next candle right here, noted that it gave some manipulation, running lower, set the low of the week, and blasted to the upside, focusing of course on the original consolidation right here to complete the market maker buy model, and of course the main draw on liquidity, which was of course the quarterly main draw on buy side liquidity that we just talked about. All right, so now as we dropped to the daily time frame, we can see how nicely price reacted here to the weekly bearish fair value gap. Again, it wasn't something game changing again, but still it caused a slight bearish reaction here. It retraced into this micro bullish fair value gap that we talked about in previous weeks Monday breakdown. We had a very tiny bullish fair value gap. Price bottomed out and expanded to the upside right here. Also, what we saw in the middle here was a bear trap, and what I'm talking about, notice that price ran some buy side liquidity, ran sell side liquidity into bullish fair value gap here, which was weekly busy candle, and expanded to the upside. So these type of bear traps, when they are moving towards a specific magnet area, a massive buy side liquidity pool, and price gives massive runs that leaves lots of bullish imbalance, and then gives a pullback, runs the buy side liquidity, then runs the sell side liquidity into all of this bullish imbalance. Very often what we will see is price gravitating towards this buy side liquidity again, and it becomes a bear trap, because a lot of traders think that what we saw here with this expansion to the downside was a market shift, but in reality they are not aware of the bigger picture. Price is being pulled towards the massive buy side liquidity pool, towards the massive draw liquidity, which was again original consolidation and the quarterly buy side liquidity pool. And this is why some traders got caught after price took out this low right here, looking for continuations to the downside. Even though we had in mind that a potential bigger wick on April monthly candle and quarterly candle could take form, getting something similar to what we saw right here, bearish days, few bullish days reaction to running sell side liquidity and another bearish expansion. So as we had very one-sided drop right here, couple bullish days, we expected for price to potentially give one more sell-side liquidity run before it expands. But even if that would have taken place, this still would have been a bear trap right here, because even watch traders would have been caught looking to short the market. But as you can see, we didn't see that last run. It just skyrocketed to the upside right away without even giving that. So if you go the flower time frame here, I think you guys remember that we were trading in this lower time frame market maker buy model, something that I talked about on the weekly time frame, saying that from the weekly perspective, it was looking like just a simple pullback and expansion. But from the 4-hour time frame point of view, it was a full buy model right here, price delivering the sell side of the curve and buy side of the curve. So it bottomed out, running sell side liquidity, gave a shift in delivery. We are not trusting this low right here, but once it started pushing to the upside, obviously we started looking for longs. Main negative, of course, was the fact that all of this took place during high impact news, so we didn't caught some of this expansion right here. So overall, regarding the obstruction and what we looked for, it played out to absolute perfection regarding this market maker buy model in alignment with the higher time frame direction, running towards the higher time frame market maker buy model's original consolidation and quarterly buy side liquidity pull. So now once price reached into the weekly bearish fair value gap, causing this bearish reaction right here, it also ran notice into this institutional level of 1.10 right here, and then started dropping to the downside. So from that point, what we were looking at is to see how lower time frames will react. Is it going to drop right here and run some of the sell side liquidity before expanding to the upside, or is it going to bottom out fully here and start climbing? So what we saw right here, if we would delete all of these drawings, was this flower imbalance right here, bullish imbalance. Their price spent most of the time just chopping around. You can see how sensitive this area was. Even though we saw a couple bodies of candles close below it, overall notice that most of the time only VIX were spiking below it right here from the flower perspective, showing that it was sensitive imbalance points. Also, if we would draw the consequent encroachment, another thing that's not very visible, but still regarding the bodies of candles, you can see that price respected the consequent encroachment here, caused a reaction, and we saw a drop lower below it. It retraced into the consequent encroachment. We saw a reaction lower again. Then eventually it broke above it one more time, retraced the consequent encroachment with bodies, and only then expanded. So this is where we saw a lot of messiness, but still this bullish imbalance on the flower held the price, sending it to the upside. All right, so going forward, once this buy side liquidity was taken out right here, once the higher time frame buy model was complete, original consolidation tagged, or till buy side liquidity tagged, this is where we are at now. So notice that price formed this outside candle right here on the flower, and what I mean by that is because this candle fully engulfed this candle in the middle, running sell side liquidity and buy side liquidity, also running into bullish fair value gap. So this is a proper outside candle. So if we drop to the lower time frames right here, what we must keep in mind is that we are sitting right below the quarterly DPR right here. So it would be perfect to see price eventually bottom out on a sharp structure, form a sharp low, and continue pushing to the upside, taking out this buy side liquidity and reaching into the quarterly BPR, which is where we would look to be fully out of the markets regarding the upside. Because again, remember, we already had a one side at 1000 pip move in here. So bearish reactions, bigger bearish pullbacks on the daily time frame, lower time frames is eventually coming. It's not clear when it's going to take place. It could take place this week as well. We are not sure because traders are taking profits. Price already ran lots of buy side liquidity, and we know that once that happens, when price takes out lots of buy side liquidity pools, and I'm talking about real higher time frame, massive buy side liquidity pools, often price after that starts consolidating or pulling back, causing a reaction. Something that we saw once price ran into the bearish weekly fair value gap. It ran into it, caused the reaction, didn't give a complete shift in delivery because of course we had more buy side liquidity pools pulling price to the upside. But in this case, we can expect a bigger reaction, a bigger pullback, especially as we have Easter holidays coming up. So keep that in mind. Regarding the downside, obviously as the main pressure is still bullish, if we see sharper to first lesson type of structures, we will obviously look for continuations higher, ideally looking for market maker buy model fractals. That's as always the ideal type of formation for us. But again, we are not 100% sure of how price is going to act here. There's a high chance of price today simply consolidating because we have empty news calendar. Monday we're here and Tuesday running sell side liquidity, forming low of the week and expanding to the upside. So this would be the absolute perfection right here for us. Again, it's not clear whether we are going to get that or not. So we will have to be patient, follow price action closely. Again, remember that the higher time frames are still pointing to the upside. However, we ran loss of major higher time frame buy side liquidity liquidity pool that can cause and will eventually cause a bearish reaction, a bearish pullback. So this is why we must be very careful with our longs and not be too overly aggressive and wait for lower time frames to actually get insane. Bottom out, leave sharp structures, and this is where we'll start looking to potentially reach into the low of this quarterly BPR. So that is that for now. As always, I will keep you guys updated if we see any changes in delivery, if we have to adjust to some pars, if the overall picture here on the lower time frames is changing and all of that. Keep in mind that we obviously could get some quick short scalps to the downside, but as always, as we are blowing against the line right here, these would be high resistance, low probability type of place. So we would have to have full lower time frame 15-minute and execution time frame alignment, not stretch our targets, look only for quick in and out type of positions. But again, I will keep you guys updated if we have a green light to catch something like that. Main focus again stays on the upside. If we see strong structures take place that we could trade away from. Overall, it would be great to see price not rush and break below this low right here. Ideally, we want to see all of these structures regarding the upside take place above this flow right here. Bottom out somewhere here and then expand towards this buy side liquidity, which is Friday's buy side liquidity right here. But again, of course, it's only Monday morning. It's every day to tell. We will see once we get more information, more price action. So for now, that is all. I hope it was insightful and we will talk a bit later.